Hey guys, Ted with GammaEdge here coming at you post-market recap for May 8th, 2025. What looked like a potential training day today quickly, became a range day. Traded up almost 100 points from the session high to low, finished right back near the opening print. So what we're going to do here is we're going to review the key levels from pre-market prep, then understand our intraday tools would help us to navigate the price action. All right, starting out with our market trend model. Again, this is how we gauge trend and momentum in the market based off the tick index. So that's measurement of real-time buying and selling, right? But yeah, nonetheless, the cumulative tick itself has been very flat for the past week. So, really, we don't have a strong, opinion on buying versus selling right here. Like, there's really not been much pin action lately. So we'd rather wait to see the market make its move before we, try to predict that. Having said that, still net, we are above the longer term moving average ribbon. So that is constructive within that fact. But again, from a bullish point of view, we want to see the cumulative tick expand higher with the railroad track starting to expand higher as well. Now, this consolidation isn't bad because of the move that we've had the last couple of weeks, right? You can't just be sprinting forward the entire time. You need to take periods of rest and then, let structure reset and then you sprint higher again. So this definitely isn't bad, but if you're a bull, you want to see this hold. The last thing you want to see is, a meltdown of the cumulative tick here. So want to see that remain strong. From there, getting into our SPX options market analysis. The reason we do this is one, options market are forward looking. Two, the SPX is largest, most, liquid options market we can observe. Therefore, by understanding what's happening in the SPX, you can get a good feel for what is happening kind of at a general basis, meaning you can broadly understand how the market is positioned, right? So looking at SPXA, call dominated below spot price. We were getting a nice gap higher. So a lot of these strikes would have been cleaned up. But, from the pre-market view, we were, kind of put dominated above spot price. So we want to see that get cleaned up. By that, we just need more call speculation to come into the complex. But net, this is still constructive given, the amount of call speculation sitting under price. But from a gamma point of view, basically at zero over here in NetGex, so the structure is well balanced. Next, looking at SPXP full complex, again, looking at NetGex, fairly well balanced structure. Below spot price, above spot price, kind of a mixture of call versus put dominated strikes. Above spot price, we can see net OI is call dominated, so that's constructive to see. We just need to see the magnitude of call speculation continue to move higher, which will impact the net delta, which that should then increase higher or more favor more of the call speculation as well. Additionally, looking at our transition zones, well defined here, 56.45, 56.40. So what this means in broad strokes, if you're bullish, you just want to see the market above 56.45. That is kind of the key fulcrum in the SPXP full complex. So just recapping real quick, kind of from a longer term, kind of swing trading point of view, market trend model, consolidation mode right now. And then both of the SPXP, SPXA complexes, those are fairly consolidating as well. By what we mean there is it's kind of recycling through the call versus put dominated structures. Keep in mind, we are nowhere near being as put dominated as we were back, in the middle of February. But then, especially SPXP complex, which remember is kind of where the shorter term traders are focused. We want to see this really starting to brighten up green, meaning, call speculation is dominating the complex. Lastly, what we're doing is getting into our SPX 0DT complex. Here, just going through what the different color boxes mean. The pink, that's just the implied option move from the options market itself. We have the white box, which is our GEX or gamma transition zone, blue, which is your DEX transition zone, and then our orange, which is our drunken sailor zone. So effectively, the way you can think of these zones is really, if you're bullish, you want to see price above these zones, and if you're bearish, you want to see price below these zones, because these zones can be thought of as kind of areas of congestion. And then, right, once you get above those zones, that's kind of where, more of the call dynamics take over if you're bullish. And then if you're bearish, you want to see it below where more of the put dynamics take over. And that simply just has an impact on price and makes it easier or harder for price to move higher or lower based off what side of the zone you're on. So again, for today, you can see that we're gapping up to 56.85. So we're well above all of the key kind of transition zones. So once we are above 56.85, then the next kind of logical area is 56.95, 5,700. That's just based on the magnitude and the positioning of speculated within the 0DT complex. And right, if we were to get above 5,700, what you're saying is we would need to see, material speculation, intraday speculation higher to help drive us higher in price. So going to price action itself today, so this box right here, this represents our DEX transition zone. Remember 5630, 5635. This line right here represents the top of the drunken sailor range. So what that means is we want to see price get above this to where we would then expect, call domination to step in. We would expect to see price appreciation above this level. And so, right, I mean, there's really not a ton else to say, just from looking at price action, right? Like we held about the top of transition zone, moved through drunken tether range, then we got a nice pop up to the 50 bit above 5,700. We really didn't see any material speculation above that level intraday, hence why, we kind of failed to progress higher from there. But let's kind of get into specifically what I mean about that. So intraday, aside from our levels, there's two key things that we're monitoring within the community. Intraday, first, the market trend model, again, because this helps us understand kind of what the buying and selling and transactions under the hood of the market are doing. And so remember, coming in today, very choppy. But finally today, intraday, we started to see a push higher in the cumulative tick. We also started to see the filter tick, which is our measurement of large buying and selling taking place in the market, transacting in the market. And so we can see the green is spot price itself. So as spot price was starting to ramp higher, we were seeing some follow through in the transactions within the market as well. But then again, we can see that really started to wane as we started getting into the afternoon. Price, was coming down, was consolidating. Then we started to see the waterfall. And, we just did not see that propensity of speculation continuing to move throughout the duration of this session. And then what we also do is we marry up the market trend model and our levels with our intraday volume analysis. What I mean by that is, so we analyze SPX 0DT volume on an intraday basis. Reason for that is because 40 to 60% of daily volume is occurring in the 0DT complex. So it's very important that we understand how those speculators are transacting because it can impact price. And we see that day after day after day. So this is one of those tools we built specifically for that. What it is on a 5-minute basis, we are taking call and put volume. We are aggregating that. We are figuring out the distribution, the midpoint of that distribution, which is called a centroid. And we're plotting that centroid both for the call and the put side. So every 5 minutes, plot, 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 plot. We connect the dots. We form these solid green and red. Green is for calls, red is for puts. And then we can understand what the behavior of those centroids are throughout the session. And then that presents us with two things we can do from that. That is the trend of the centroids. A, we can understand price action for the session, meaning is it trending or is it choppy? And B, we can understand, okay, if we know what happens from the open to noon, then all things equal, we can project out what the likely path of those centroids are through the close. And right, that updates every 5 minutes throughout the session as we get more data. And right, price goes where transactions are occurring. And that is what we are measuring with our centroids. So I understand what the potential path of price is that can inform your intraday strategies, whether you're, a directional scalper, you're an options seller, whatever it is, this helps you understand both where price is going and, maybe more importantly to you and your strategy, where price is likely not to go. So again, I will show you an intraday example of this so you can see how it's actual intraday, because this is just the end of the day snapshot, but just understanding what's happening via the lens of the centroids. So in the morning, price was dripping down. We saw no upside speculation. It was just moving lower. Got this nice price appreciation higher in the middle of the day. Maybe some Trump said, maybe it wasn't. I don't know. I was off the desk at the time, but nonetheless, what we did see is once we started getting up to these levels, we saw a drop off in call speculation. When we see that drop off, it kind of puts a lid on the market, and it's really hard to move higher unless we see action like this continue throughout the session. In fact, we saw the opposite. We saw just a downtrending. So again, from a strategy point of view, if you're trying to catch a massive long up here when we have action like this, probably not the best play to make, because like I said, there is a lid on the market. You're probably going to get chopped up and you're going to eat a stop. However, if you're a credit spread trader, understanding that, a lid's on the market right now, that can be very helpful. Again, and then, marrying it up with our key levels, 5,700 was a key level. We weren't, able to materially push up higher than that. And then again, just layering on with the market trend model was fairly flat. The centroids were flat to lower. That's, very good confluence there. Then same thing to the downside, looking at the puts and trades, these trended higher all day. So again, this tells us, hey, there's not a massive risk of a material waterfall. Yes, we had a decent, sell off at the end of the close, but that's towards the end of the session where, there's a ton of operators in the market and they're going to do what they're going to do. We're more concerned with from the open to 3:30, not necessarily the last 30 minutes of the session. Although many times, obviously not today wasn't the case, but many times, these centroids hold pretty true to where price does finish in the middle of those. So hopefully that it's clear now, understanding our pre-market routine, how we get to key levels, and then B, how we trade price action with those key levels, but also understanding what price and activity from the speculators under the hood through our market trend model and our volume analysis are helping to inform our expectations for price action throughout the day, which ultimately informs our strategy. And so here is another good example. This is showing you what this looks like on an intraday basis. So here, this is 1:20 p.m. Eastern Standard Time. Again, I'm just showing you, okay, character price action starting to trend higher via the centroids are trending higher, right? And then projecting the path, this is trending higher as well. However, something to keep in mind is this centroid right here at the time was starting to flatten out. We were looking at that. We were discussing that, meaning we weren't seeing a material move higher. So again, and we were well above 5,700. So it's just kind of dampening the expectations that unless we see this continue higher, price is probably going to be limited on how much further it can move higher. Right, and then, just fast forwarding, an hour, yeah, from 1:30 to 2:45, you can see, that's exactly what happened, like, we were looking at this, and then, this introit's price just moved lower, did not get that continued speculation higher. So knowing this probably would have helped you, save yourself out of, really trying to bang, those intraday trades continue higher. You're just, gonna get stopped out, gonna get very frustrated. And if your credit spread trader, just understanding kind of where price is not likely to go is also super helpful as well. And with that, hopefully the strategy is clear now on, A, how we get our key levels, B, how we're monitoring intraday activity to help us with our strategy intraday, right? So appreciate you guys watching. Let us know in the comments if that the things were clear or not. With that, best of luck tomorrow. We'll see you all probably over the weekend for a Friday recap. Thanks. Bye.